Sometimes when you're shopping for insurance, you may feel like you're ordering a bowl of alphabet soup. You'll probably hear new terms or words that may not be completely clear, like deductible. That's your out-of-pocket cost when you file an insurance claim. In most cases, the amount of your deductible will also have an impact on how much you pay for insurance. For example, if you have a higher deductible for car insurance, like $1,000, you'll have to pay more for repairs if you get in an accident. But it also means you'll pay a lower rate or premium, what you pay monthly, quarterly, or biannually. When a disaster strikes your home or you have a car accident, the amount of the deductible is subtracted or deducted from your claim payment. Deductibles are the way a risk is shared between you, the policyholder, and the insurer, your insurance company. A deductible shows you have skin in the game and helps mitigate what's called a moral hazard. That's negligence or risky behavior on the part of the insured, which could lead to loss. With no deductible, a driver who has car insurance could think it's okay to drive in a reckless manner or leave their car unattended in a dangerous area. Hey, they have insurance, no worries. A deductible mitigates that risk because the driver will have to pay a portion of the cost for any loss. Deductibles also help insurance companies with financial stability. A properly structured insurance policy protects against catastrophe. A deductible provides a cushion between small damage and a truly catastrophic loss. Without it, every minor claim would be the insurer's responsibility. That would lead to an overwhelming number of claims and make the cost of insurance explode. Remember, each time you file an insurance claim, you'll be responsible for paying the deductible. This generally applies to property damage, not the liability portion of your policy. So if you have a grill fire and that leads to property damage, you'll pay a deductible. However, if a guest in your home is burned by that fire and makes a medical claim, you would not have to pay a deductible for liability. In your home policy, a deductible can vary depending on what caused the loss. Most standard homeowners insurance covers damage from wind, hail, and hurricanes, but each of these may have their own rules. In hurricane-prone states, special deductibles may apply. That could depend on what trigger is used by the insurance company. Triggers vary by state and by insurance company and usually apply when the National Weather Service officially names a tropical storm, declares a hurricane watch or warning, or defines a hurricane's intensity in terms of wind speed. Hurricane deductibles are generally higher than homeowners policy deductibles and usually take the form of a percentage of the policy limits. Wind and hail deductibles work in a similar way and are most common in places that experience severe windstorms and hail, like the Midwest and Tornado Alley. These deductibles typically range from 1 to 5% of the policy. Flood insurance offers a range of deductibles and vary by state and insurance companies. If you purchase a policy through the National Flood Insurance Program, there is a waiting period and there is also a limit to the amount of coverage you can get. And finally, earthquake insurance policies have deductibles that can range from 2 to 20% of the replacement value of your home, depending on location. In states that have a higher risk of earthquakes, minimum deductibles are typically around 10%. Major natural disasters may not happen often, so high deductibles bring lower costs to policyholders in normal years, but can mean a big expense when catastrophes strike. That's why it's important for people who live in danger zones to plan ahead. With any insurance, it pays to shop around to make sure you find a policy that fits your needs and budget. Understanding the role deductibles play when insuring a car or home is an important part of getting the most out of your insurance policy. And a final word of advice: never take a higher deductible than you can afford. Choosing a high deductible does lower your monthly insurance payment, but it also means a higher bill to pay when things go wrong.